Assalamu alaikum. My name is Ismail Tradingwala, and today I'm here with another AI session. So, hello ChatGPT, how are you and how are you doing? And how's your day?
Hey Ismail, I'm doing really well. Thanks for asking. My day's been pretty smooth so far, just here, ready to help out with whatever you need. How about you? How's your day going?
My day is also good and going well. So, can constantly in trading even be guaranteed?
That's a really good question. And honestly, it's one of the big myths. Even the best traders deal with uncertainty. Markets are just too unpredictable. You can aim for consistency by controlling risk, sticking to a plan, and refining your edge, but guaranteeing it, that's a bridge too far.
So, what does constantly really means in trading?
Yeah, great follow up. So, consistency in trading really means showing up with a repeatable process, making similar decisions under different conditions, and staying disciplined. It's not about never having a losing trade, it's about maintaining the same approach, risk management, and mindset, even when things go up or down.
Are traders confusing constantly with certain?
Yeah, that's super common. People kind of hope that once they get consistent, the outcomes will just become predictable, but that's not the same thing. Consistency is a discipline of behavior, not a promise of a fixed result. So it's really about controlling what you can, your actions, your risk, while accepting that markets stay uncertain.
Are can outcomes be controlled or only managed?
That's a crucial distinction. Outcomes in trading are really just probabilities. You can't control them directly. What you can control is how you manage risk, how you respond to each trade, and your adherence to your plan. So you're always navigating uncertainty, but you keep your behavior predictable.
Is is guaranteed profit a myth?
That's a classic debate. Strictly speaking, no. There's no universal guarantee of profit since the market's always dynamic. But some traders do set themselves up to have a positive expectancy, like a statistical edge. So if they execute consistently, over time they have a decent chance of profitability, but no certainties.
Are you choosing stability in an unstable system?
Exactly. That's a big part of it. Trading is this constant balancing act. You're operating in an inherently uncertain system, but you choose a stable approach like risk rules, position sizing, and a clear strategy to give yourself a sense of control in all that chaos. It's a bit like being a steady hand in a stormy sea.
Yes. So can probability even guarantee results?
No, not even probability can guarantee results. Probability just gives you a framework, like a way to estimate outcomes over time. You might have a 60% probability of success in a certain strategy, but that still means 40% of the time things won't go as hoped. So it's a guide, not a guarantee.
Okay. So how to guide them?
Yeah, great question. The way to guide yourself is by setting a solid process. Define your risk per trade, stick to a plan, test your strategies on historical data, keep a trading journal, and adjust based on real results. The key is small, consistent steps and constant learning.
Why do traders expect predictable outcomes?
Exactly. And that's where a lot of traders slip up, hoping for that crystal ball. But when you focus on having a positive expectancy, meaning your wins on average outweigh your losses, you give yourself a real edge over time. It's all about trusting the math, even when each single trade is unpredictable.
Do you understand warning in trading? Guarantee for warning in trading?
Yeah, that's a really important mindset shift. You can understand the odds, you can manage risk, you can improve your decision making, but you can't make a single trade certain. So once you accept that, you can still thrive by being disciplined and patient, just never expecting certainty.
Why do good strategies still lose sometimes?
That's a great point. Even top traders lose sometimes because they don't expect perfection. They just expect a winning process. They cut losses quickly, stick to their plan, and keep the bigger picture in mind. Losing is just part of the journey. They don't let it derail them.
How hard do you do that to stick to their plan?
Yeah, it's really tough at first. I mean, it takes practice and a lot of mental discipline. What helps is having a clear plan. You define your entry and exit rules, set stop losses, and remind yourself that every trade is just one step in a larger journey. When you take the emotion out of each single trade, it gets easier to stay on track.
Are losing proof of failure or the part of the system?
Yeah, exactly. Losing doesn't mean you failed or the system is broken. It's just part of the natural distribution. Every system has losing trades. What defines success is how you respond. Do you stick to the rules, refine your approach, and keep your long term focus? That's what matters.
So, why does the brain craft certainty?
That's a really deep one. The brain naturally craves certainty because it reduces stress and gives us a sense of control. In trading, that's a trap. Certainty is an illusion. What works better is tolerating uncertainty, training your mind to stay calm, flexible, and focused on probabilities, not guarantees.
Hmm. So, are expectation destroying your certainty?
Yeah, exactly. Expectations can really set us up for disappointment because they anchor us to an idea that everything should go a certain way. When we release those fixed expectations and instead focus on the process, it frees us up to adapt, stay in the game longer, and make better decisions even when things don't go as planned.
So, do just quiet to lead you to impatient?
Yeah, absolutely. It's all about staying grounded in the present, trusting a strategy, and not letting a single outcome define your worth or your system. By reducing that need for certainty, you stay open to learning and keep evolving as a trader.
So, how do they evolve as a trader?
Great question. So they evolve by staying curious, constantly reviewing their trades, learning from both wins and losses, and adjusting their approach over time. They also keep refining their risk management, test new strategies, and sometimes even change their market focus. It's a long game. They evolve through reflection and adaptation.
Are expectations destroying your consistency?
Yeah, exactly. When we expect outcomes to be certain, any deviation feels like a failure. But if we let go of that need for certainty, we can stick to a consistent process, adapt, and trust that over time the probabilities will work in our favor.
I know. Why do traders expect quick results?
Yeah, it's really human nature, right? There's this craving for immediate payoff, especially when money is on the line. Plus, the market's so fast paced, it's easy to think that quick wins mean you're on the right track. But sustainable success is a marathon, not a sprint.
So do traders quite too early due to impatience?
Yeah, that's really the key. You have to consciously remind yourself that the market rewards persistence, not haste. So celebrate small wins, learn from losses, and trust that if you keep showing up with patience and discipline, you'll eventually get those steady results.
Is frustration caused by an unrealistic expectation?
Yeah, exactly. When we have expectations that are too rigid or unrealistic, like expecting instant riches or zero losses, frustration is just around the corner. But when we ground ourselves in realistic milestones and focus on the long game, that frustration starts to fade and we get back to steady progress.
Are you focused on progress or result?
Yeah, that's really the sweet spot. If you focus on the progress, like mastering a process, staying disciplined, and refining your approach, then the results tend to follow naturally. It's like building a solid foundation. Once it's there, the outcomes start to stack up, even if they take a little time.
So can constant action lead to an inconstant result?
Yeah, definitely. It's a bit counterintuitive, but the more you let go of obsessing over immediate results, the more you free up mental energy to learn, adapt, and improve. And that patience over time is what really leads to a better performance because you're constantly evolving toward long term improvement.
Why is progress constantly more than important than the outcomes?
Yeah, that's the big paradox. Progress is all about building habits, skills, and a solid decision making process. If you keep a steady focus on that, refining your edge, managing risk, then good outcomes become more likely over time. It's a long term game.
So people should do long term or short term.
Yeah, it really depends on their goals and mindset. Short term can be exciting, but it's risky and often emotional. Long term, on the other hand, builds resilience and steady growth. Most successful traders balance both ways short term learning, but anchored in long term strategy.
Well, how do you do that? In, for example, you can take what example?
Sure. So, for instance, a trader might focus on a long term strategy like trend following, holding positions for weeks or months. At the same time, they might use short term analysis like daily or hourly charts to decide exact entry points. That way, they get the best of both worlds big picture conviction and precise timing.
But if you talk about long term, the longest trend in social media I have it was a song named Headlights. It was really more trending than anyone's else. But if you talk about short terms, mm, a short term, I don't like things.
Yeah, I see what you mean. So in social media, those short-term trends, like a song blowing up overnight, can feel really intense. But the long-term impact, like a song becoming a classic, is often way bigger. So just like in trading, balancing both acknowledging the hype but sticking to what lasts can really pay off.
So what do like a trend like a song recent 4 years ago was released what I have heard and it's been growing instantly viral from 1 month or 1.5 or 2 months.
Yeah, that's really interesting. I think that happens a lot. Sometimes a song just suddenly clicks with a new audience, maybe through a specific meme, a viral clip, or a trend on TikTok or Instagram. And once it hits that tipping point, it just skyrockets even years later.
So then, like, if you take to that, this song is very good. What song I'm talking about? It is long term, and it was long term. Uh, it stayed more than any other song, but in trading, how to maintain long term.
I see what you're getting at. So, just like that song, staying long term in trading is about sticking to your core strategy, even when short term noise distracts you. You keep your risk in check, stay consistent, and remind yourself that real growth comes from those steady, patient decisions, not just quick wins.
And what can be short term, like if there is a trend for most, but if you say like that on social media most trend are not weak weak but when there is a term with the long term so they can get um, more liking more profit from that, but how to do short-term planning in this in trading?
Yeah, I get you. So, in trading, short term planning might mean using things like daily or weekly charts to catch a trend early. You might set smaller targets, tighter stops, or look for intraday patterns. The key is balancing your short term moves with that long term vision so you don't get swept up by every little spike, but you still catch those trends early.
So people should performance do both long term and short term.
Exactly. By keeping both in view, you get the best of both worlds. Short term performance gives you quick feedback and opportunities, but long term planning ensures you're building something sustainable. So it's all about balance. Stay patient, but also stay tuned into the shorter term signals.
Like if you talk about mm, if you want long term money for giving it, doing it patiently. If you are doing short term, you can do for days, something like that.
Exactly. That's the balance. So if you're focusing on long term, you give yourself time, letting compounding work for you, staying disciplined. And when you trade short term, you can take smaller, precise steps, maybe a few quick trades, but still anchored in that bigger strategy. Both sides feed into each other just with that measured approach.
So how can we do this?
Yeah, it really depends on your style and your time frame. If you're a part-time trader, maybe you check in daily or weekly. If you're more full-time, you might review short-term charts every day, but still anchor your big picture trades to a weekly or monthly plan. The key is consistency. Find a rhythm that suits you and stick with it.
Like in trading, yeah, I also like trading, but there are how many types of trading?
Absolutely. Yeah, there's a whole range like day trading where you open and close positions within a single day,
But
swing trading.
what is closing position, opening position?
Great question. So, opening a position just means you enter a trade, buying or selling a security. Closing a position is when you exit that trade, selling what you bought or buying back what you sold. So, it's basically the start and finish of a trade.
And what type of other?
Gotcha. So, there are different types of orders you can use when opening or closing a position. For example, a market order buys or sells at the current price, while a limit order sets a specific price you want. There's also stop loss orders to automatically close a position if it moves against you. So each type of order lets you control how and when you enter or exit a trade.
So and how many traders are how many trading methods are there? Like what type of trading stock market are there? And more kind of things, more kind of traders.
Yeah, absolutely. There are a ton of different approaches. You've got day trading, swing trading, position trading, and even algorithmic trading. Then there's fundamental analysis, which looks at company financials, and technical analysis, which uses price patterns and indicators. You can trade stocks, forex, crypto. It all depends on your style, risk tolerance, and how much time you want to put in.
So according to you, which style suits you perfectly?
Good question. For me, I really like a swing trading style. It's a bit more flexible, so I can still keep a long term focus, but I can also take advantage of medium term trends. Gives me time to analyze.
What is swing trading?
So swing trading is when you hold positions for a few days or even weeks, aiming to catch short to medium term price moves. You're not glued to the screen like a day trader, but you still capitalize on momentum and market swings. It's a bit of a balance between long term and short term.
And if you want to choose, what is the good long term and what is the great short term?
Yeah, so for a solid long term strategy, you often look at well established companies, broad index funds, or sectors with steady growth, things like major tech firms or blue chips. For short term, though, you might focus on momentum stocks, news driven moves, or sectors that are bouncing quickly, like certain commodities or crypto. So it's about matching your time frame to the right asset type.
Mm, trading, stocks market. Which reading is this with I forgot his name. With the lines go down and up with red green things. It is stock market.
Ah, yeah, I think you're talking about candlestick charting.
Yes,
It's
candlestick chart.
exactly. Candlestick charts show price movements with these colored bars, green for up, red for down, and each candle captures the open, high, low, and close in a specific time period.
What is
Traders
this
often
called? What the name it is?
got it. So those patterns are called candlestick
No, no,
patterns.
no, no. The name of this trading.
I see. You're thinking of technical analysis using candlestick charts. So it's not a separate type of trading, but a method within technical analysis, a way of reading price action to decide on trades.
Yes, I get it that it is a candle chart, but what is his name specifically? Like swing trading, stock trading, crypto.
I get you now. So what you're describing is still part of technical analysis, but it can be applied to different markets. For example, you could do swing trading in stocks or crypto or day trading in forex. So the name depends on the time frame or the asset.
Okay, so
Swing stock.
candle trading will be good for it. So in my opinion, candle trading should be for short term, and from long term you can go to the stock markets and crypto and e-commerce with it.
Yeah, that makes a lot of sense. Candlestick patterns are super useful for capturing those short-term price swings, especially in fast-moving markets like crypto or daily stocks. And then for a long-term view, you can definitely choose broader markets like blue chip stocks, crypto holding, or even e-commerce trends, since those develop over years. So yeah, that mix can work really well.
If can you stay constant when results are not there?
Exactly. So candlestick patterns and short-term trades can guide you, but the results still won't be guaranteed. You keep focusing on the process, consistent risk management, sticking to your plan, and over time, you're giving yourself the best chance at steady results.
But in candle there are much more do to in to out. Like if the up goes down, if you are focused enough to buy and sell it, it will be a guaranteed win. Guaranteed, I do not mean always win, but if you have the focused, if you are focused on your chart and your screen, you can win it is easy win.
Yeah, I get what you mean. Candlestick patterns can give you really clear signals, and if you're super disciplined and stay focused, you can catch a lot of good moves. But just remember, even with focus, there's always risk. So you just have to keep that balance, stay humble, keep learning from each trade.
If you look at it, because when if it is losing, you can sell it. If no, you cannot. But if it is going up, just sell it. Down, buy it again, sell it. But in a day, you should be more humble, like to do at least 150 to $100. Or if you have the professional trades mind in it, so you can go high, and it is also good.
Yeah,
Sell, buy, sell, buy.
yeah, that's the core idea. You're basically following the price action, staying nimble and adjusting quickly. Buy when you see a dip, sell when it climbs. And yeah, for beginners, setting modest daily targets like $50 or $100 keeps things realistic. Once you gain experience, you can scale up, but always keep risk in check.
Okay, so brutal truth. You will never control result. You will never guarantee profit. But if you control your action with ruthless intensity, you give yourself the only real fight edge. So thanks for watching.